Hello friends, today we will talk about basics of investing in stock markets. This episode is for beginners who have still not started investing in stock markets or who have just started but want to understand more about the market. So how do we start trading in the markets? What are the requirements and what is it that we should know before we should start investing in the market? So you need basically two simple things to start investing in the market. One is a demat account and second one is a brokerage account. Now, demat account is something which holds your securities in electronic format, similar to a bank locker which keeps physical items in its possession. A demat account keeps electronic securities. NSDL and CDSL, these are two organizations which offer this facility, and you can avail this facility through any depository participant. It would cost around 500 rupees per annum to operate a demat account. Talking about brokerage account, this is the account which will be used to buy or sell securities. So this will be your interface to the markets. You can open this account with any broker, preferably with someone who offers online trading facility. And you have to provide margin to your broker before you actually start trading. Good news is these days, both demat account and brokerage account, both of these are facilitated by most of the online firms together. So you can get the integrated service on demat account and brokerage account through one firm only with which you open your account. On the brokerage side, you should be careful before choosing the partner because brokerage could range between 10 to 20 rupees per trade to as high as 0.5%. So depending on your requirements, depending on how much you're going to trade in the market, choose a good brokerage partner to save on brokerage. So let's talk about how stock market prices are determined. How do we know what is the price of a stock? When someone says Reliance's share price is 2000 rupees, what does it really mean? What we need to understand is how stock markets work. There are thousands of buyers and sellers trying to trade in the stock, some people trying to sell, some people trying to buy. And only when the price matches, only when they arrive at a common price is when the trade happens. And whatever is the last traded price of that particular stock becomes the price. So before the electronic mode, if you look at how trading used to happen, so there will be thousands of people on the stock market floor trying to buy or sell a particular stock. And only when the price matches, only when the other person hears and they come to a deal, then the trading would happen. And whatever is the last traded price becomes the market price for the stock. Thankfully, today we don't need thousands of people on the floor because everyone is trading electronically. We have stock exchanges which are fully electronic, so we don't need physical presence of buyers and sellers. But what is happening electronically is also thousands of buyers and sellers coming together electronically and trying to buy or sell stocks. So if someone wants to buy a share, he has to place a bid price, a price at which he is willing to buy the share. And if someone wants to sell the share, he has to place an offer price, which is price at which he is willing to sell the share. Now, only when the matching happens, only when the bid price is equal to offer price is when the trade would get executed. Otherwise, both the buyers and sellers will be on a queue. And it will look something similar to what I've just shown on the chart. So this is a live chart on how trading happens. On the left hand side, you see all the buyers placing their bids at a particular bid price. And on the right hand side, you see all the sellers putting in their offer price at different quantities. So what does this really mean is at a price of 1931.55, there are people willing to buy 65 shares. And at a price of 1931.50, just 5 paisa less, there are people willing to buy 372 shares. But would the trade happen at this price? The answer is no, at least not at this point of time. Because the sellers on the right hand side, there are people ready to sell 96 shares at a price of 1931.60. There are sellers ready to sell 115 shares at a price of 1931.65. So unless the matching happens, either some of the buyers, they increase their bid price, or some of the sellers, they reduce their offer price, transactions would not happen. And when you call a market price, or when you say the market price of a particular stock, it is the price at which the last transaction happened on the stock exchange. So this is very important for you to understand, because when you are placing bids or when you are trying to sell on the stock exchange, you should really know what is the bid price that you should put or what is the offer price that you should put to maximize your return. Now that you know how prices work in the market, let's see how do you actually buy or sell. So first of all, transfer margin to your broker's account. Every broker will have a standard process. So follow your broker's standard process and transfer margin to your account so that you can trade. And then depending on your broker's user interface, you will get a online platform where you can buy or sell. So you will be able to select a buy option or a sell option depending on what you want to do. And once you select that, you will get a screen something similar to what I've shown right now. So you can select exchange, NSE or BSE. It really does not matter. Look at the price in both. Most of the user interface screens would show the prices next to each other. So whatever is favorable to you, go for that exchange and then select the stock that you want to invest in, and then put the quantity depending on your budget and margins that you have given. And lastly, select an order type. Now, order type could be either a limit price or a market price, and we will talk about these two order types now. So let's see what is the difference between a limit order and a market order. A market order would get executed immediately at the prevailing market price. So if you're willing to buy a share and you put a market order, what would happen is it would take the latest offer price, the best offer price in the market right now, and your transaction would get executed at that offer price. So in the example that we were talking, if you place a market order, you will get a price of 1931.60 because that is the best a seller is offering right now in the market, and you have put a market order. But in case you want to be cautious and you want to put a limit order, which means you are willing to buy only at a particular price, then what would happen is your trade would get executed only when someone is willing to sell at that price. Otherwise, it would not get executed. For example, if you want to buy at 1931.1 or 1931.2, then you will be placed in a queue on the left hand side, and you will be one of the buyers willing to buy. Your bid is on the stock exchange, and only when there is a seller who comes to that price, then your trade would get executed. Otherwise, your trade would not get executed. And same thing works on the sell side. In case of a market order, it will get executed at the best available bid price. But in case of a limit order, it would get executed only when the seller is getting the price is put in as his offer price. So again, most of the investors, they prefer putting limit orders because that's when you can actually define what is the price that you're willing to trade at. So now that we know how to put orders, let's look at how to read codes. So in most of the trading platforms, you will see a similar screen which will show last traded price. This is the price at which last trading has happened on that particular stock. What was the price at which the stock opened? What was the last day's close? What was day's high? And what is important is high price range and low price range. In a given day, the stock will be within this particular range. It can't go beyond this range. It can't come down beyond this range. This is a limit put by the exchange, and the stock has to be within this limit. What you can also see is what is the best bid quantity, best offer quantity, and price as well, and 52-week high and low, lifetime high and low. So this is a typical trading screen. This is basic information that you get on your online platform. So when you're trying to place an order, do look at this screen because you can decide what should be your right bid price or ask price on the exchange depending on this information. So next is a very interesting topic. How do I make money in market? So there are many who feel we put money in the market and then prices go up and therefore they make money. But what do you need to understand, which is very fundamental and which comes out of whatever we have seen so far, is if you are buying a stock today, there is someone who is selling the same stock at a price you are buying, which means in that person's mind, the stock price is not going to further go up, or because of his liquidity needs, he's selling the stock. At the same time, you feel the price of that particular stock is going to go up. So there are two people making two separate decisions on the same stock price. One person feels the stock price is going to go down, the other person feels it's going to go up, but they kind of match at a price and the transaction happens. So always remember one thing: when you are buying, someone else is selling. And therefore, what is important is you do proper due diligence before you buy or sell. So now that we know basic infrastructure to trade on stock exchanges, and also we know how do we place bids or how do we sell on stock exchange, let's look at how do we do basic fundamental research using NSE or BSE's website. So it's very simple. Go to NSE or BSE's website. Today we will just look at NSE's website. How does it operate and how do we do basic research using that? If you're a beginner and you want to understand a little more about stock exchanges, just go to NSE's website and do top 5 stock Nifty 50 and click on view all, and that will give you a good overview of how markets work. So let's explore NSE's website and see how does it work. So I am on NSE's website right now, and if you are a beginner, best thing is start with this particular section. Go to view all. So this particular section basically displays which are the top gainers and losers. Right now we are starting with Nifty 50. The first screen that you get is Nifty 50. These are the top 50 stocks on NSE which are part of Nifty index. So you will be able to know which are the stocks out of Nifty 50 which are gaining today, which are the ones which are losing today. So for example, Mahindra and Mahindra today, it opened on at 754, high was 804, low was 750 today, and yesterday's close was 751. So the stock is and the last trading price is 802. So the stock is almost 50 rupees higher than its yesterday's last trading price. There is a good volume on it, and 52-week high is 952 and 52-week low is 320 rupees. So this particular section on NSE's website will give you a good overview of top 50 stocks. Now you don't need to be restricted to top 50. You can always select which ones do you want to look at. So you have an option of top 50, the next 50. If you like investing in mid cap stocks, then look at the mid cap ones, mid cap 50. Give you detail of top 50 mid cap stocks. Similarly, you can look at small caps, small cap 50, 100, 250 stocks. What is important is if you like particular sector and if you want to do more research on that, you can go to the sectoral section. For example, if you like energy, select energy and you will see top energy stocks in the country. If you like financial services, select that, media, metal, pharma. So this website will give you a good overview of which are the top stocks in different sectors. There are thematic indices also like commodities, CPSE, infrastructure, MNC. If you like any of these areas, then go to this particular section and find out more about what are the stocks which are available, what is the current trading price, how much was 52-week high, 52-week low, and that will give you a good idea about entire sector, how it has performed in last 52 weeks. And once you do that, and if you want to do more research on a particular stock, then go to the search section and select the particular stock. So let's look at Reliance Industries. Website will give you a very good overview of what's happening on Reliance. So the last trading price is 1930 rupees. Previous close was 1911. What is important is section which is on corporate information. So you should always look at this section before you invest in any stocks. This gives you a good overview of its annual reports, the board meetings which have happened and what has come out of the board meetings. The financial results, again, very important. How is this company doing from a financial standpoint? You should always go to this section and look at the detailed reports. You should also look at shareholding pattern, which is very important. How much of the holding is with promoter and how much is with other shareholders. And please look at the details of these because you should be able to find out how much is mutual fund holding in this particular stock, how much is FII holding. And all of this will give you a very good idea about how others are thinking, how institutional investors are thinking. You can also get information about historical data of that particular share, whether it's 1 day, 1 week, 1 month, 3 months, or 6 months. You can easily find it out from this website. So first thing as an investor or as a beginner, what you should do is get familiar with this website because this has a lot of information which can help you in analyzing the stock, whether it's specific corporate related information or it is about corporate actions like dividends or rights issue or bonuses which this stock has given in the past, any information related to corporate governance, or it could be secretarial compliance or voting results. So be familiar with this website, contents of this website, because this can give you a lot of information which will help you, which will enable you when you start investing. Now that you know how to do basic research, you have seen how to start trading, how to set up a trading account, and how do you place orders. 5 things that you should definitely know before you invest in any share. You should always do economy and sector check before you make your first investment or before you scale up your investments. Look at company credentials. Do not just invest on the basis of numbers. Do proper research about company credentials, promoter credentials. Look at the profitability and growth of that particular stock. Look at the cash and liquidity position, and also look at the valuation of the stock. All these 5 points have been explained in another video on the same channel. Feel free to look at that video to understand these in detail. But do not invest in any share before you do these 5 checks. I hope you were able to learn more about stock markets today. How does market operates? How are prices determined? How to place your bid or sell order? And how do you do basic research? Please understand stock markets are always subject to market risk. So do proper due diligence before investing. Like and subscribe this channel for more such content. Thank you. Jai Hind.